IRS Form 1099-R, which is the tax form that reports distributions from pensions, annuities, retirement plans, profit-sharing plans, IRAs, insurance contracts, among other things. So most taxpayers will not need to complete this form. However, you may receive one or more of these forms that you're going to need certain information from so that you can report it properly on your income tax return. So if you look at the form instructions, you'll see that they're on the same page as the instructions for IRS Form 5498. So I'll briefly explain that relationship. So for a 1099-R, the way I think of it is that it reports money coming out of an account. So if you receive a Form 1099-R for your IRA, that means you had money coming out of your IRA. It might not be a taxable distribution. There might be a reason that it's tax-free. It might be penalty-free, but it's money that's coming out. If you receive an IRS Form 5498 for your IRA, usually, then that means that's money coming into your account. These are both informational tax returns, and you don't necessarily need Form 5498 to report that year's tax return. However, you do need certain information on your Form 1099-R. Now I'll go through all of these fields, fields 1 through 19. A lot of these you probably will never see, but we'll walk through them anyway, just so you can be aware of what you should expect, and then keep your eye out in case there's anything that's reported that's not expected. To accompany this video, we have written a comprehensive article which you can find on our website. And I'll give you the information to that a little bit later, and then I'll also put it in the show notes. But if there's anything that we don't cover in the video, we do cover in a little bit more depth in the article itself. So in the article, we kind of break this down into 4 different sections. So on this left-hand side, there's the information in these boxes without any numbers. I call that taxpayer and or payer and recipient information. On the right-hand side, we have lines 1 through 9. And then right beneath the payer and recipient information, we have lines 10 through 13. And then down here in the lower right-hand corner, we have lines 14 through 19. Those fields are optional mostly, and they're really for state or local tax purposes. We're going to cover them all step by step, and if there's anything that we don't cover here, it's in our article. So let's start over on the left-hand side. We've got the payer's contact information. I did forget to put the phone number. Let's just call it. There we go. So Acme Financial Solutions, let's just imagine that this is an IRA distribution. So we've got the taxpayer identification number for the payer, which in this case is the financial institution. It could be an employer. It could be a wide variety of different taxpayers that had an account or paid retirement pensions or insurance contract benefits to a taxpayer. So it can be a financial institution, an employer, a plan administrator, insurance company, things of that nature. Just to the right of this, we have the recipient's taxpayer identification number, usually Social Security number. And then just below that, we have our recipient, John Q. Doe. He and his address and information are just below. So all of this is pretty straightforward. The main thing that you need to check on is just to make sure that your information is being properly reported, because it needs to match up with your tax records. So on the right-hand side, let's get down to business. In box 1 is the gross distribution amount. So in this case, let's call this an IRA distribution. of $50,000. This is a fully taxable amount in line 2A. If it wasn't taxable, or any amount that's not taxable would not be listed in line 2A. I'm going to stop right here. Before we go any further, you can see a check mark for void, a check mark for corrected. So if either of those are checked, there are additional instructions, but generally the void means that that version has been replaced by an updated version, and then the corrected version would be checked accordingly. So for box 1, this would also include certain amounts. So anything distributed from a qualified retirement plan, if you decided to pay health insurance premiums under a section 125 or a cafeteria plan, or if that distribution was paid directly to reimburse medical care expenses. This could include payments for long-term care insurance contracts, reportable death benefits, Roth distributions. A lot of things could be reported as a gross distribution. It doesn't mean that it's necessarily taxable. So, a rollover from one IRA to another one would generate a 1099 for the IRA that the rollover left, and it would also generate a Form 5498 for the account that the distribution went to. But a direct rollover would be not taxable, so you would see something like $50,000 in box 1 and then 0 in box 2A. So, you would also see, like I said, any taxable amount, but the following items would be excluded from box 2A. So a direct rollover from a Roth account, such as a 401k account, to a Roth IRA, any traditional SEP or simple IRA rollover into an employer-sponsored plan, a recharacterized IRA, non-taxable Section 1035 exchange for insurance contracts, a non-taxable charge or payment for the purchase of a qualified long-term care insurance contract. Basically, if the financial institution or your employer or the payer determines that that distribution was not taxable, then you would see only the taxable amount here. The other thing that they can do is check box 2B if they are not able to determine the taxable amount. That would be something that they would leave blank if they don't have all the information. Like if you I don't know, if you did a 60-day rollover instead of a direct rollover, they wouldn't be able to tell whether or not you held that money outside of a retirement account for more than 60 days. They couldn't tell what your intentions are. It may be taxable, it may not be taxable. So the box 2B amount not determined, if that's checked, then that means you basically have to determine that based on your interpretation of the tax rules, or probably more correctly, your accountant will. If box 2B is checked, that simply means that the entire account has been liquidated as of that year. So if you're taking periodic payments or installment payments, then this would be checked in the year of the last payment. Or if you just liquidated the entire account in 1 year, that box would be checked. If there's any amount that would be taxed as a capital gain, then you would include it in box 2A. You would include it in box 2A, but then you would also break it out as a capital gain item in box 3. So most taxpayers aren't going to see this. You might see this if there's an amount from a charitable gift annuity. If you were taking a lump sum distribution from a qualified plan as a taxpayer either born before January 2nd, 1936 or a beneficiary, then you would also be familiar with the tax form that accompanies that. So there's a special tax form where you can calculate the capital gain based on that. I believe that's IRS Form 4972. I'll double check and put that mention in the show notes. But there's a special tax form for retirement plans and for participants that were born before that specific date. Again, January 2nd, 1936, or beneficiaries that inherited a plan accordingly. So there are special instructions on how the institution would calculate that capital gain amount. For this tutorial, it's really not necessary. In box 4, you'll see any federal income tax that was withheld. So in this case, John Doe had a 30% withholding set at Acme Financial Solutions. So per his instruction, they withheld 30% or $15,000 and remitted it to the IRS. There is no additional reporting that he needs to do other than just making sure that this is included in his Form 1040. Now, if you do eligible distributions, there are two different ways that you can do distribution. One involves maintaining custody of the funds between the financial institutions. So there's either an IRA or a retirement account that the money's coming from, and then there's an IRA and a retirement account that the money's going to. As long as those two institutions maintain control of the funds at all times, then there is no required federal income tax withholding. However, you can also request that a check be sent to you, and then you turn around and remit the check to the account custodian of the destination account. There is a tricky little problem with this. A couple of things. One, it is a federal requirement that the financial institution, if they're cutting a check to someone other than a financial institution, if they're cutting you the check, they must withhold at least 20%. Now you can file IRS Form W4P, which will give them further instructions on holding more taxes, but 20% is the minimum. And then to avoid any kind of tax on your distribution, you have to come up with that 20% and put it into the destination account within that 60-day period. So if this were a taxable distribution, or if this were a rollover, John Q. Doe would, in this case, receive a check for $35,000. However, he would need to turn around and put $50,000 into his destination account just to keep any of this from being taxable. Now, when he reports this on his tax return, he's going to show that he paid $15,000 from his 1099-R, and that will be reflected in his tax liability, and he'll most likely get a sizable refund. But if he doesn't put that additional $15,000 into the destination account, then he's going to pay taxes, and he could possibly pay an early withdrawal penalty of 10% if he doesn't meet one of the exception criteria. So be careful when you're doing that. Otherwise, you generally kind of have some control over what taxes are withheld, other than the mandatory 20%. In box 5, if there were any employee contributions to a retirement plan, any designated Roth contributions or insurance premiums that you would be able to recover tax-free, that would be in here. In this case, there were none. And most of either 5 and 6 usually are blank. 6 has to do with net unrealized appreciation. If you were if you received stock or other securities from an employer-sponsored plan, then this would be the net unrealized appreciation. For example, if you had shares of your company's stock in a profit-sharing plan of some sort, then you would see some amount of net unrealized appreciation in those either stock options or restricted stock units. So if this is a lump sum distribution, then you would see all of the net unrealized appreciation show up here. If it's not, then it would only be the NUA attributable to your contributions. Now, in box 7, which also includes the IRA, SEP, simple, if this is a distribution that involves an IRA of some sort, this box will be checked. So obviously, that's what happens here. Distribution code 7 happens to mean that it's a normal taxable distribution from a traditional account. However, we've got you can see up to 2 distribution codes in box 7, and if more are required, then you would probably expect to see multiple 1099-Rs breaking down the transactions. So we do cover this a little bit more extensively in our article. We have an entire section. So if you're stymied by a distribution code that appears in your Form 1099-R, the odds are likely that we go into depth about it in our article. So take a look at that and just keep it in mind for reference. In box 8, marked Other, this would be mostly the actuarial value of an annuity contract that's part of a lump sum distribution. Any amount here would not be included in either box 1 or box 2A. So unless this is an annuity, you'll probably not see anything in box 8. For box 9A, if this was a total distribution and it was made to multiple people, then you would see a percentage of the total distribution that you received as opposed to another party. So let's just imagine that John received 50% of this. Then someone else's 1099-R should see the other 50%. In 9B, this is for an employer-sponsored plan. Employers are not required to put information in here, but it could help if you were an employee and you were trying to calculate your total contributions, your designated Roth contributions. This might have some information in it, but it doesn't necessarily have to have anything reported. All right, so now we're on to this lower left-hand corner. In box 10, amount allocable to IRR within 5 years. So an IRR is an in Roth transfer. Basically, any amount of a distribution that was allocated to an IRR, like a transfer between Roth accounts made within a 5-year period, the 5-year period that starts with the first day of the year in which the rollover was made. There's special tax treatment for Roth conversions. So if there's any amount that's attributable that could be taxable, even if it's coming out of a Roth account, that dollar amount would be here. Since we're seeing a report on a traditional IRA, I would not expect anything to come out of here. However, if you see distribution codes that match up with Roth accounts and there is a dollar amount in here, that may be taxable. You would definitely need to take a closer look into your situation to better understand that. And then box 11 marks the first year of that designated Roth contribution. So your custodian would put in the first year, and then that basically kind of tells you what what you would be subject to as a taxpayer. In box 12, this box will be checked if there's a foreign financial institution that's trying to meet certain U.S. filing requirements. There's also U.S. Financial institutions may check that if they're reporting on 1099-R as part of satisfying a requirement for Chapter 4 of the Internal Revenue Code. So this probably won't mean much to you as a taxpayer. It's more important for the financial institution in terms of their compliance. If there's an account number, they may put that information here. It's not necessary at all. You should only see this if there were death benefits paid. The date of payment is fairly important for the payment of death benefits. For most other distributions, just the year of the payment is really what's important. An IRA distribution on the 31st of December really doesn't receive any different treatment than an IRA distribution on March 31st. Now, these last blocks, 14 through 19, you'll only see these if there are state or local tax implications. These are completely not necessary. They're not required by the IRS at all because the IRS doesn't really pay close attention to state or local tax issues. But you will see that there are two fields. So you can put, like, let's just say Texas. If for some reason someone lived in 2 states during the tax year and you had multiple distributions that were allocable to one state or the other, you could put something like Texas and New Jersey. Odds are probably not very high that you would see anything reported in Texas, since there is no state income tax in the state of Texas. But you would put that in here. You would also see the amount of tax withheld. So it would be like, $5,000 or something like that. The state number would be the abbreviated name of the state. So if you call that Texas, and then there would be the payer's identification number. So it'd be like their employer identification number that attaches them to that state. So you might see that. And then the state distribution would be the amount of the distribution that was subject to state income tax. And then same thing on the local level. Maybe you withheld $2,000. And then the local distribution amount would look like that. So that is a fairly brief overview of Form 1099-R. It can be a lot more complicated, particularly if you do have any of these moving pieces that we kind of didn't get too deep into because this was a traditional IRA distribution. These distribution codes, there are a lot of them. I mean, like 35 to 40 of them. So if you do see one that doesn't look familiar, then take a look at our article, and you can quickly research and better understand what the distribution code means for your transaction. So as I mentioned, you can get all of this information in the article that we wrote. Simply go to teachmepersonalfinance.com, type in IRS Form 1099-R, and you'll see our article. You'll also see the link to the article and any forms we mentioned in the show notes. If you enjoy our articles, please subscribe to our newsletter. And if you enjoy our YouTube videos and our tutorials, please subscribe to our YouTube channel. And if you have any questions, comments, if there are any other walkthroughs that you would like me to record for the YouTube channel, please reach out and let me know. Otherwise, thank you very much and have a great day.